Hi, this video is going to explain debits and credits for accounting. There's a little bit of background that I will review briefly, and you can also go back and watch Chapter 1 videos. The accounting equation is assets equal liabilities plus owner's equity. Assets are anything that you own that will benefit you in the future. So, for example, cash, accounts receivable. Accounts receivable, when you collect the cash from the customer in the future, it will benefit you. And then any prepaid expenses, these are expenses that you paid in advance. For example, prepaid insurance, if you pay it in advance, you will use this insurance coverage in the future, so it will benefit you in the future. Equipment and land. And these are just some examples of assets. We will discuss more later in the semester.
Next, we have examples of liabilities. These are things that you owe.
Next, we have some examples of liabilities, and liabilities are things that you owe. Accounts payable, that's the most common one, anything ending in payable, and notes payable, and unearned, like unearned revenue. This is anytime a customer pays you ahead of time and you owe the customer the goods or service, and so you have not officially earned the revenue. You owe them the liability, you owe them goods, or you owe them services. For example, my 12-year-old son, he cuts a neighbor's grass in the summer, and the neighbor pays them in advance. So he pays them up front, but he earns that revenue each time he cuts the neighbor's yard. He earns some of that revenue. Revenues would be service revenue. For if you're a service company, you perform a service, and then another way to say that would be fees earned, or sales if you're a merchandising company and you sell merchandise. And expenses, these are things that you incur and use up within the same accounting period, such as utilities expense, rent expense, depreciation expense. Okay, back to our equation. On the left-hand side, you have assets. On the right-hand side, you have your liabilities and your owner's equity. As you read a transaction such as owner invested money into a business, you know it's going to affect at least two accounts. For example, cash would be increased. That's one account, and then capital would be increased as well. Debits and credits are how you're going to make these accounts go up or down. Okay, so this is a T account. This is a representation of your account. And for example, this will be any asset account. Every single account will have two sides. It will have a left side and it will have a right side. In accounting, the left side of the T account is called a debit and the right side of the T account is called a credit. What changes is which side will increase the account. Now, because cash is an asset on the left-hand side of the equal sign, the asset cash will increase on the left-hand side and decrease on the right side. Another word for the increased side is the normal balance. An asset has a normal debit balance because that is its increased side. Okay, so if owner invested money, cash into the business, cash would need to go up. We would debit cash. The way that would look in a journal entry is you would have a date column, you would have an account column, a debit column, and a credit column. And you put your debits in your debit column and your credits in your credit column. So I made up a date here, and here's the account cash debit for $500. So for this journal entry, we'll need another transaction debit or credit because it's not in balance. Remember, the accounting equation says the debit should equal the credits. And we have debits of 500 and credits of 0, so we need to get going, and we will. Let's look at liabilities. Notice the T account. This is the left side. It's still the debit side, and the right side is always the credit side. However, since we're on the right-hand side of the equal sign, the increase side is going to be on the right-hand side and the decrease side is going to be on the left. Now let's look at capital, which is owner's equity. It is on the right side of the equal sign too. Remember the T account, left side, right side. The left side is always the debit side. The right side is always the credit side. But since it's on the right-hand side of the equal sign, it will increase on the right-hand side, which means decrease will be on the left. Okay, so now we have enough information we can finish up our journal entry. We said we needed cash to go up, so we debited it. We also need capital to go up because the owner invested cash into the business. So how do we make capital go up? So look up here at capital. How do we increase capital? We credit it. Okay, so indent a little bit when you do your credit, and you always place your credit after your debit. And then we'll put it in your credit column, and that is a journal entry. Okay, let's keep going with our T account. Okay, up here we have some components of owner's equity. So the rest of our accounts are components of owner's equity, and we need to look at those accounts and see how they work. So we have revenues, expenses, and owner's withdrawal or drawing. We need to look and see how these affect owner's equity. Revenues make owner's equity increase, so it has a positive relationship. Expenses make owner's equity decrease, so it has an inverse relationship with owner's equity. Drawing also makes owner's equity decrease, so it also has an inverse relationship with owner's equity. So let's look at revenue first. It is going to stay on this side because it has a positive relationship with owner's equity. So we're going to put revenue here, and every T account has a left side, every account has a right side, and every account's debit is on the left and credit is on the right. And since it's on the right side of the equal sign, it will increase on the right side, which means it will decrease on the left side. Okay, these two are opposite or have an inverse relationship with owner's equity, so they're going to be on the left side. So we're going to put expenses and drawing on the left side. Every account has a left side, every account has a right side, every account has a debit side, and every account has a credit side. Okay, for the normal balance, because it is an inverse to capital, that means that it's going to have the opposite normal balance. So the increase side will be on the left side, which means the decrease will be on the right. So notice that it works. Expenses work basically the same as the asset accounts work. Okay, and drawing works the same way as expenses. Since it is the inverse of capital or owner's equity, I've placed it on the left side of the equation here only to show that it's opposite. So the normal balances for expenses and drawings or debits, they increase on the debit side because they're the opposite of capital, which increases on the credit side. There's an even easier way to remember this, and it's a saying that goes, after eating dinner, let's read comics. So the sentence is separated by a comma, so everything on the left side of the comma is increased on the debit side, the left side, and everything on the right side is increased on the credit side. So let's look at it. After eating dinner, assets, expenses, and drawing are all increased on the left side. So after stands for assets, eating stands for expenses, and dinner stands for drawing. So if I need to make any asset, expense, or drawing go up, I'm going to debit it. And if I need to make any asset, expense, or drawing go down, I'm going to credit it. So if I use cash, that would be a credit because I have decreased cash. So let's look on the right side of the comma. Let's read comics. So all of these accounts will increase on the right-hand side or the credit side. Let's stands for liabilities. It will go up with the credit. Read stands for revenue. It will go up with the credit. And comics stands for capital. It will also go up with the credit. So let's just look at a couple of examples. Let's say I pay $90 for a utilities expense. We know that's going to make cash go down, so the cash is an asset, and to decrease an asset, we will need to credit cash. Okay, we'll use the same date, and we will need to skip a line because I just figured out I need to credit cash. So indent, and credits always go last, and put the amount in the credit column for $90. Okay, now utilities expense needs to go up because every time I incur an expense, expenses are going up. So look up here and you see to increase expenses, increase you debit. So you would debit utility expense and put 90 in the debit column, and debits equal credits, and that is your journal entry. And we would continue moving on just like that. Okay, and finally, there's just one more thing I want to say. When you're learning to use debits and credits, as Miss Bergeron, another accounting instructor, said, it's kind of like playing a musical instrument. For me, I'm thinking of the piano and how I learned to play the piano. You can memorize all the transactions in Chapter 2 because there's not a lot of them. So you could memorize those. You could learn a song on the piano and learn to play it, memorize it, and play it really well, really fast, and you could be really good at that one song. I don't want you to do that. What I want you to do, if you really, like in music, really look at the notes, really learn the notes, where your fingers go, and really understand what transaction makes what account go up and what side does this account increase on, and really understand each transaction and how the accounts are affected, you will be able to do any journal entry. Just like in music, when you really understand where to place your fingers and which note means what on the piano, you can learn to play any song. Memorizing will get you through that one song, and memorizing transactions will get you through one chapter, but you really want to understand what you're doing. Yes, it will take a little bit longer, but in the long run, you're going to save time, and you're really going to understand the material. As always, let me know if you have any questions.